Namaskar. Greetings to Steelmint and the participants of this esteemed conference. I apologize for not being able to take part in this conference due to some personal commitments. I have been asked for my views on the global trade flows in the steel and scrap markets and also my views on the short-term outlook for the industry. I don't think I know any more than any of you, but I'll still try. The world changed on the 24th of February 2022 when Russia entered Ukraine, and it is still changing. Russia and Ukraine were major players in the global steel trade. Ukraine is out and Russia is trading, trying to bust sanctions like what Iran has been doing for years now. Russian exports will continue, but at below market prices, hurting the entire global steel trade. Cheap billets offered from Russia to Turkey rapidly brought down the $350 to $400 rise per ton in global steel prices that we saw in March-April this year. So much so that prices went even below the pre-war levels. Russian commodities are finding home in non-NATO countries, with the exception of Turkey, of course. Will this change? No, I don't think so. Sanctions are a punishment. Sanctions won't be lifted till Russia kneels and apologizes, and I don't see that happening with Putin or even beyond. We have seen this in Iran. Western sanctions are dividing the world, and that's just too dangerous. The energy crisis, which has now become the biggest problem for Europeans, is a huge fallout of this Russia-Ukraine war. As much as Europe tries, consensus is that this crisis will remain for another 2 to 3 years. This will cripple European manufacturing industry, which was already contracting slowly but gradually. EU members will be divided on how to respond to this crisis as the winter season approaches. We could see some political turbulence in EU in the months to come. Recent developments reported suggest that EU may turn to importing semis as manufacturing costs go through the roof. We have to see how this evolves. Global scrap trade flows have become extremely regional due to logistics issue. Japanese scrap is mostly consumed by Korea, Taiwan, China, and other ASEAN countries, with the exception of Bangladesh. Middle East scrap does not go beyond Western India or Pakistan. European, Baltic, US East Coast scrap is mostly consumed by Turkey. US West Coast scrap goes to Asia via the Pacific. Freight costs have played and are playing an important role in regionalization of global scrap trade flows. How will this change? Turkey is slowly losing its pole position as the world's biggest buyer of scrap. Very soon, British India, comprising of India, Pakistan and Bangladesh for the sake of talking, will replace Turkey as the world's #1 importer of scrap metal. Imported scrap arrivals in Turkey in July 22 were just 1.38 million tons, lowest in the last 31 months since Jan 2020, and nearly half of 2.6 million tons imported in Jan 2022. Imported billets from Russia, sky-high inflation, ever-weakening lira, and high energy costs are some of the major factors plaguing the Turkish steel industry. Besides, Turkish manufacturers are slowly losing out on export markets to other players. Like they are almost out of Singapore and Hong Kong rebar markets, having been replaced by manufacturers from ASEAN and the Middle East. Steel consumption in British India and the Middle East will be the drivers in the times to come. Saudi Arabia will invest over $1 trillion in transforming its economy. Young blood ruling in Saudi Arabia, Abu Dhabi, Dubai, Qatar, and Oman would ensure that this region of GCC, with a population of 55 million, consumes over 1,000 kilograms of steel per capita. Watch out for GCC. Coming to per capita steel consumption, the British India region, with a population of 1.8 billion, hardly consumes 70 kilograms of steel per head. By 2025, we can expect the population of this region to touch 2 billion. China consumes almost 10 times more. Vietnam, in just 20 years, has grown from less than 50 kilograms to almost 400 kilograms in per capita steel consumption. Imagine if British India grows from 70 kilograms to 150 kilograms, only 150 kilograms. We will need new steel production for almost 180 to 200 million tons. Where will this come from? We have the resources, but what about decarbonization of the industry? All nations are committed to the COP26 protocol. Steel industry needs to grow, but also needs to decarbonize at the same time. It will be interesting to see how this evolves. One big challenge to this is how scrap exporting nations are wanting to lock down their scrap resources for domestic consumption. We have to be concerned about this and how this matures. Bangladesh is going the Vietnam way. India, of course, leads the region. The present governments in India and Bangladesh have shown how important it is to invest in infrastructure for growth of the nation and its people. Unfortunately, Pakistan suffers from political and governance issues. Otherwise, the country has tremendous potential to grow as rapidly as Bangladesh or Vietnam. Talking of Bangladesh, from 8 million tons annually, steel consumption will skyrocket to 15 million tons annually by 2025. Lots of new melting capacities are coming up, and big ones. Scrap imports, briefly deterred by exchange rate and US dollar liquidity issues, are expected to touch 6 million tons in calendar 2022. You will be surprised that Bangladesh scrap imports in 2022 will be almost equal to India or could be even higher. I expect Bangladesh to import almost 8 million tons of scrap by 2025. India, it has changed a lot. Strict GST implementation means imported scrap is now a necessity. Tata Steel is getting ready to consume more than 3 million tons of scrap soon in its proposed electric arc furnaces across India. That will make it tight for the scrap availability in India. I expect, at the rate things are going, India to import almost 12 million tons annually scrap metal by 2025. Next year, in 2023, India and Bangladesh together will import, most likely, 14 million tons of scrap metal. We expect almost 80% of this will come from break bulk, which means nearly 1 million tons a month. This will help fill up the void left by Turkey. If Pakistan joins the party, which we pray for, British India would be importing almost 25 million tons per annum by 2025, if not sooner. This will make this region the numero uno in scrap imports. I am personally very bullish on this region and the GCC. So much so that I don't recollect in my 28 years of this trade, when was it last that during the monsoon months, Indian long product prices remained firm, bullish and did not fall. Now the construction season will start soon. Talking about China, it is quiet for now, undergoing COVID restrictions and an overhaul in its housing and real estate industry. However, I believe next year China will bounce back. COVID should be gone by the end of this year, hopefully, and Chinese government will ensure that the real estate industry bounces back stronger than ever before. the government will continue to push for infrastructure growth as it has been doing for decades now. Once China stabilizes, ASEAN will be able to normalize. This will help global sentiments a lot. Global trade flows will change further. Volatility is the new stability. It is the new constant. It's scary, but that's the bitter truth. We all want stability in prices with nominal and normal movements. However, what we see today are rapid, unexpected, frequent, and extreme movements in prices. Global demand and supply has a 25% quotient which is sentiment based. When prices are rising, buyers want to stock up almost 125% of their needs, and vice versa when prices fall. They wait it out while fishing for the bottom. We all want to strike at the top and at the bottom, but that in reality is only hindsight. I can only pray to God that this volatility goes away, but I know God's answer. He didn't do it. It's all man-made and He has no control over it. The geopolitical developments, the rapidly changing global economic, financial and political scenario, and how well connected we are with all the breaking news is playing havoc on our sentiments. We all know what we buy today is based on today's market and today's sentiments for material arriving 3 to 4 months from now. And we don't know what the markets will be then. So in effect, we are and we will continue to shoot in the dark. But then it is the only way to play the game. There's no alternative. For the next 3 to 6 months, I can't predict the future. And I have quit crystal ball gazing. All I know is, historically, October to March are always bullish, but for the Chinese New Year and Eid holidays. In September, sentiments are always at their lowest. As the saying goes, night is always the darkest before dawn. So I guess September is that month and October is when the dawn breaks. Like in cricket, form is temporary but class is permanent. So in business, don't worry about your seasonal form. Build your class by staying in the game and preparing yourself to fight a long battle. Don't get too excited if you make super profits and in a couple of months, and don't get too distressed if you lose money. Be in the game for long, stay put and adapt continuously. The world will change rapidly and will evolve around us, and we need to adapt to this whole new world. At Indicaa, we are adapting fast. We have invested in steel manufacturing and we hope to be making 1 million tons of steel in the next 5 to 7 years. So help us God. We have started break bulk trade in scrap metal, having booked 3 vessels already, and we hope to take this further. We continue to consolidate our leadership position in the containerized scrap metal trade. All in all, we continue to adapt to this rapidly evolving environment around us. We have to survive and maintain our leadership position. Thank you all. I wish all participants a fruitful and a successful conference. Namaskar.